This has been a tremendous partnership. We did have a vision, and I think that speaks to a lot of what we're talking about today, having a clear vision, knowing why you're doing what you're doing. We had a vision when we started this 7 years ago, and in some ways, we're just living into that vision. So investing in the future, having a clear answer to the why you're doing what you're doing does make a big difference, and I think that's one of the reasons we're here today. So I do want to thank you all for attending this year's Community Bank Conference. It does provide an abundance of valuable information, and that is why we gather each year, really to listen and learn as academics, regulators, policymakers, and importantly, bankers share their experiences and findings. While this is the close of the conference, I really want to challenge you that it should not be the end of the conversation or the work. That is what should take place next with each of you. What have we learned over the past 2 days, and how should that inform our work going forward in the 50-plus weeks a year that we're not here? And that's why I ask each of you to reflect over what we've talked about in the last couple of days and think, what is the 1 or 2 things I can do based on what I've learned? For academics, identify new areas of research that need to be explored. I think you've heard a number of challenges on where that might be. An idea that will help your community bank model, or ways as regulators we can reduce regulatory costs. I think we talk a lot about regulatory burdens, but reduce regulatory costs while still maintaining high regulatory standards. How can we be more effective? Think about what CSBS Chairman Brett Afdal said yesterday in his opening remarks. How can each of us innovate and push our comfort zone to re-examine laws, policies, the way we regulate, the way we do business? This conference checks the pulse of community banks year after year. It helps us understand what challenges they are facing in the current marketplace. That is important because, as we've just been discussing, with every industry, and banking is certainly no exception, the pace of change is very rapid. This year, our annual survey found a surprising shift. Probably not for bankers. For the first time in years, regulatory compliance costs, while still significant and, according to the survey, growing, that regulatory compliance wasn't the top of the list. Instead, it was funding. So I think it's appropriate that I'm just following this panel as I raise that issue. Findings like these are important, and they should get us all thinking. Clearly, funding is on the minds of the industry, as we just heard from the last panel. So what can we do as regulators to enable, or at least not impede, a diversified and changing funding model? Where is new research needed? I ask the academics. And what can community banks do to ensure sustainable and cost-effective funding? One of our premises when we started this 7 years ago was that better information resulted in better policy. I think we're all in need of some better information as we look at funding challenges for banking in the future. One of our biggest drivers of funding concerns is around technology and the relationship with the customer, and we've heard a little bit about that just moments ago. We all know that technology moves at a fast clip, and both financial institutions and regulators need to stay in step. It is impacting everyone's business. I know it certainly is impacting my day-to-day life. I have an IT organization within CSBS that's the fastest growing part of the organization. Data analytics is probably the areas of fastest growth within our organization. The emergence of new technologies provides possibilities along with change. We are, I think, at a rare moment in supervision and the delivery of financial services history because of technology. Often regulators are challenged in determining what they're willing to give up as we have these conversations about regulatory relief, pendulum swings. What are we willing to give up in order to provide regulatory relief? Now, because of technology, at least I believe there's an opportunity that regulatory relief and effectiveness can actually happen at the same time, that we can reduce costs and actually make for more robust and more effective supervision at the same time. This is important. We regulators need to own that supervision has an impact, and not just on the financial institutions we regulate. A paper, presented yesterday proposed that regulatory relief for small bank holding companies had a real impact on local economies because they could boost their small business lending without affecting risk-taking or transparency. As regulators, how can we leverage technology and data to better tailor supervision? I think that's going to be a growing conversation. It already is a conversation, but a real challenge for us. We've heard both challenges and opportunities for community bankers in adopting new technology, and research presented this week shows technology investment helps banks' productivity and employment, and so that's all positive. Last year's CSBS annual survey results showed that community banks were embracing technology. That would indicate that we should be seeing more of this in practice. Yet this year's survey results showed that not as many banks seem to be doing so, or not at a rapid pace. Why? One reason, we've heard this a lot, is cost. So I charge you to all think about, and we heard from a group of bankers on this panel and previous panels that are thinking about, how can we effectively adopt technology while maintaining and controlling costs? How can we work together to leverage shared costs to adopt the technology we need to effectively compete in the marketplace? I think we're also challenged as regulators to think and have conversations with banks as they're considering the adoption of new technologies, new partnerships, and how can we help them vet that process in ways that, again, support the vitality and the viability of the institution while still holding them responsible for those relationships with their vendors. Cost isn't the only impediment for banks. Another is structural, and I probably heard this over the last 2 days more than anything. Some of our survey's respondents expressed significant frustration with core providers and technology vendors that hold the banks, and these are quotes, captive or effectively stall their technological process. We need to better understand all the barriers to technology adoption faced by community banks. We've heard this challenge. We've heard this over and over again, and the challenge for us as regulators, and we heard a request, we've heard a couple, is there anything we can or should do as we look at these structural barriers to innovation, or understand these structural barriers to innovation? Meanwhile, competition with fintech firms is another area of focus for community banks. We learned this week in a paper that looked at allocation of small business credit that when small banks leave a community, fintech firms can jump in. Conversely, another paper showed that small banks remain a vital resource of mortgage credit despite the rise of shadow banks, and maybe because of the withdrawal of larger financial institutions. I think this is a great opportunity to further delve into how community banks can retain customers in a high-tech fintech world. What types of customers? I think academics can help understand this. Certainly bankers can help understand this. What type of consumers are going to be attracted to a brick-and-mortar operation that have also embraced technology? Our panel of students yesterday gave us a very useful pool to test out some of these ideas. What is the impact on competition, of competition, our impact as regulators on competition? That's another question that's been asked, the proverbial level playing field. But as regulators, I do think we need to better understand and think about, as a network of regulators, rather than regulating our pieces of the market, our overall impact on the entire market and what it delivers, and areas of either innovation or arbitrage that system can create. A paper presented yesterday also made me consider the impact of regulation, not necessarily in new or novel ways, but it affirms some of the things that I believe, that the regulatory consequences of some of our actions can have broader impact. So this was about banks funding for their ALL, or overfunding their ALL. And the conclusion was that banks, community banks that had by at least some standards, overfunded loan loss reserve were better able to respond to natural disasters. I think we shouldn't need to learn these lessons again and again, but sometimes second-guessing our institutions on how they manage their balance sheet can have unintended consequences. And we're certainly having an active discussion about that as we talk about accounting standards. But how we adopt and supervise for those accounting standards is really important, and make sure that bank judgment remains a critical part of that decision-making. Lastly, overwhelmingly, cybersecurity is considered the greatest threat by community banks. It is an issue that impacts really every business, and the repercussions of a cyber attack can be great. At CSBS, we've responded to this by prioritizing cybersecurity examiner training. We've trained almost 700 examiners and funded through CSBS at no cost to the states, almost 1,000 examiners of both bank and non-bank examiners. We're creating examination programs for non-bank cybersecurity. And as we think about these partnerships and the security and the relationship in these partnerships, the cybersecurity of a non-bank is critically important to a bank as you partner with them. So the challenge that I pose to each of you as we leave St. Louis today is, having heard the current challenges and successes of community banks, what can we do to help these banks and the financial system in the future? What can we do in this area? What innovations can each of us create? How can we push our comfort zones? And I think what's most important to reflect on is what we've heard from a number of the financial institutions here today who have been asking themselves why they do what they do. In our keynote speech last night, Julianne spoke to the mission and rethinking their vision of how they relate to their community. Our financial institutions are solving complex, important problems in society and our local communities. And that commitment to local and the aggregate of that impact, that local impact across the country, is very significant. So I think our work today should really be grounded in thinking 7 years from now, why? What do we do that's most essential? What are we trying to achieve? And how do we best enable that? So thank you again for all of you being here today. I look forward to hearing from each of you what you chose coming out of today that you were maybe going to do differently, research, expanded lines of business, thinking about the why for your institutions or your agencies or your research. So hope to see you again in St. Louis. Thank you.